Thank you so very much, Nithin, for accepting the invitation, and it's just an honor to have you here as the chief guest for this online convocation ceremony. And yeah, I think I must say that every time I have interacted with you, it has always been very inspiring to me personally, and I believe that all over EPAT participants who are turning to alumni now, they will find a lot of value by and inspiration by listening to your words of wisdom, your thoughts, and I'm looking forward to this interaction now.
Thanks, Nitesh, for having me here. And I think I visited your campus in 2016, 16, 17, sometime when you were starting off the whole thing, right? Isn't?
Yes, that's true. Yeah, it was lovely to have you at our office that day. It's great. Great. So Nathan, I think I would start off with a very specific point, um, and which is probably a bit inclined towards the kind of participation or the audience also that we see, which is that we have seen a lot of interest among the technocrats who were not really part of the trading industry earlier, right? We are seeing a lot of interest over there, and I'm sure that's the case with Zerodha as well, because that's one of the foremost choice of brokers then when it comes to the techies to invest or trade in the Indian markets. I think they look up to Zerodha as one of the most appropriate solutions. And I would love to hear about what do you think are the skills which are really needed for these technocrats who are starting their journey into the financial markets, and how they can leverage on their experience in the programming or in the on the technology side that they already have.
Right. Yeah. No, I mean, just to give you an example, we open more accounts from uh, Bangalore, Pune, and Hyderabad than Mumbai. So so
Yeah.
that tells you where our audience comes from. So yeah, for sure, there's been I think especially the last year, I think there's 4 million customers when it's actually 6 million customers now, and it's kind of the last pandemic has just kind of exploded the participation, especially the techie crowd, because I think staying at home, folks had more time on their hands,
Mhm.
and the other thing, what happened last year was, bank fixed deposit rates are all-time lows. People are not spending as much, right? So all of those enablers together pushed, I think, a lot of first-timers to the market. And amongst the first-timers, for sure, right on the top is a big section are the are folks who know programming, right? And who are coming to the markets, trying to leverage their skills in the real world to see if they can trade, etc. better. I think see, the thing is, I mean, the rules of the game, I don't think is different for a techie and a non-techie, right? As in trading, is at the end of the day, I think more than just the buy sell strategy itself. I think it's also about the risk management strategy, right? As in, it's about because people behave weirdly when under fear and greed, right? And a program at the end of the day is run by a person, right? So just because it's not manual doesn't mean the guy who's behind the program can start, stop, make changes any point of time, right?
Just
So
just yeah.
so and I know a lot of programming friends of mine, like great programmers, but who couldn't succeed in trading because they couldn't handle, fear and greed well, right? So I think the foremost thing here is to ensure that you only trade with money that you can make peace with if you lose, right? Because I think that's like the first rule. And second
Mhm.
rule is never to add more money unless you start making some profits, right? Because uh, otherwise what happens is, stock markets are like a big black hole. You can lose unlimited amounts of money, right? As in, I don't think there's anything on this planet where you can lose, unlimited amounts of money, but in
Yeah,
stock market.
that's
So
true.
Yeah, so I think the second most important thing is to kind of ensure you kind of leave ego behind and not throw good money at bad money, right? And which is another big problem amongst a lot of people that I've seen who become traders. To be very honest, uh, like some of my friends who have really pedigree education background, the kind of folks who have always come top 1 2 in the school, college, they went to IIT, IM, right? For the first time in their life, they're not able to win this race, right? And that ego comes into play, and they want to make this right wrong because they've never lost a race in their life, so unfortunately stock markets don't work like that, right? As in, it doesn't care for what your education is and etc. So I've seen bigger egos with people with pedigree education versus people who don't have pedigree education, right? Especially when it comes to trading the markets, right? Especially when it comes to accepting a loss, right? And so I think it's trading is all about trading psychology mostly. I mean, of course, the strategy matters, how you execute your strategy matters. But at the end of the day, I think the guys who make it and the guys who don't make it, really, it comes down to psychology, right? As in, people who can handle fear and greed better tend to kind of do better. And I think there are some folks I know who perform well when they kind of can go all in all the time and still somehow come across without getting stressed too much. But 99.9% of the people, I think the strategy should be to trade as conservatively as possible, not really take any risk. If you take a trade and you're not able to walk away, I think you're trading with too much, so yeah, so I guess that's really, I mean, I think that's the rule for a techie, non-techie, or anyone starting to trade in the markets.
Yeah, true. I think, and I can very much relate with the point that you mentioned that all these people, especially the professionals who have done really well academically as well as later on professionally as well in their respective professions, and suddenly when they come to the market, the skills can be a bit different than the academic skills which are required. So I think it's probably not being trained to deal with the losses, or you can say, or the losing a race. I mean, as you rightly
No, so
mentioned.
thing is, throughout, in all our life, right? If you work hard, you can do better. But unfortunately, trading doesn't work like that, right? I mean, it doesn't mean that you're gonna, if you just because you work 20 hours a day, you'll have good results, right? I mean, this is really like the first time people get introduced to a scenario where the outcome is not equal to how much work was put into it, right? I mean, of
Yeah.
course, people who start business, startups, they also face this problem, but trading is almost like starting a business, right? As where there's a lot of this right place, right time, all of that matters significantly as well. So you can't you know just work your way out of this, so
That's very true. So very true that is. Um, Interestingly, you mentioned that, and I think I very much I also say that a lot. I think in many of our interactions, which is that trading. The moment you start trading as a business, the rules change drastically. Right. So the people look at trading as that, okay, I'll put money and I'll make a lot of money out of it. Ultimately, you've got to have edges, right? So just like in any business, you need to have the same thing in trading as well. Why should the market be the kind one to you? So that's awesome. So on the rules and the business, do you think, and this question become very relevant because we do have like in EPAT, like even right now in these across these batches, we have participants from more than 50 countries. So very widespread kind of audience. So have you seen any specific rules which hold true across geographies, be it for trading or be it for any trading related business as well? Because a lot of people are involved in the fund management or other related businesses, but trading related, trading investment related. So have you seen any common trends or common rules to say?
yeah, no, I mean, so 2 years back, I think 2019. So we had this whole brainwave of sorts saying, what, we've built like a great trading platform for India. So can we go replicate this in other markets, right? So I mean, my journey started off going to Sri Lanka because I knew the folks who were running the exchange. And so I went to the Sri Lankan exchange. Then I went to Indonesia, went to Thailand. I mean, I had friends in Singapore. Then we said, you know what, if you really want to do this, you rather go do it in the mother of all markets. So, ended up landing in the US and said, let's take over one of the introducing brokers. And is there a way to create a Zerodha US? Because in our head, at least, I might have a conflict of interest here, but in my head, no, the product we've built, our tech team has built, is as good as the best brokers in the US, right, or better, in terms of all aspects. So we said, is there a way to go easily replicate it? And that's when, when I went to these countries is when I got introduced to rules and regulations and how the exchange infra is, and and all aspects of the business. And at least as a business, as a broker, every market is different. I mean, every single market is absolutely and completely different. As in, there is nothing that we have done at Zerodha that could easily be replicated. Even for example, even something like education, right? Like how stock settlement works, or how like you had to rebuild the entire content. So there was no cut, copy, paste that could work for all the markets. So then, after a while, we said, you know what? I mean, India is the center of on the planet Earth right now. So we'd rather focus on India than not do anywhere, not bother about other countries. So, yeah. So now we're focusing completely on India now. So as a, if I don't think the folks in this group are really looking at building a broker, right? But if people are,
There might be few, but yeah.
okay, okay. Yeah. I mean, if I think Interactive Brokers that way has done an amazing job. I don't know how they are managing it, how they've built a platform that works for so many different countries, because every country has its regulators, regulations, like some country like India where, like a regulator is more active than some other country, right? Where there are restrictions on every single aspect of it. It's incredible that they've built a platform like that, which can, which works in so many different markets. But I think it's extremely tough. I think the easier thing is actually to be as a trader, right? As a trader, you can really replicate your strategies and trades in different markets. Now, the only problem though is, like some of these, I think mispricing strategies on options, for example, in India, right? I don't think you'll find that option, opportunity in the US, for example, right? As in, so yeah, so so the more developed market you go to, the tougher it becomes to find an opportunity to make some mispricing kind of an opportunity, right? As in to make buck out of mispricing opportunity. So that way, actually, like personally, I think India is in a great place because you have enough liquidity. Because a place like Sri Lanka, or there's the whole day you'll have a few thousand trades. Okay, I mean you can't really sit into algo trading in Sri Lanka, right? As in, so India that way is I think is in a sweet spot. It's got enough liquidity in the exchange for at least I mean unless someone is managing $1 billion and wants to to kind of do intraday high frequency trading with $1 billion. But I think up to a couple of $100 million, I think India has got enough and more opportunities, and there are enough and more mispricing strategies that work in India. I mean, so I have a couple of friends at least who've been killing it over the last 3-4 years, just option mispricing strategies, and but yeah, but all of these, the other technical analysis type of strategy, etc. I mean, personally, I don't know if automating technical analysis strategies really works or not. I mean, I haven't really come across someone who's made money consistently on a long period of time. I mean, technical analysis strategies work when markets are trending, but unfortunately, markets don't trend. And in India, the impact cost is quite high, right? Not just the bid ask spread. Also, if you were to kind of look at the security transaction tax, you look at exchange transaction tax, you look at I mean, if you're trading options in India, other than the nifty options, really, you're losing a lot of money in impact costs if you're doing more than one lot, for example, right? So, as a trader, I think I don't think strategies also will really same strategy will work in different markets. But I'm hoping most people on this group are focusing on India, and I think India has got more than enough opportunities for a trader, automating, and because it's not a crowded market yet, as in the audience, the customers who really sit and do automated trading in India. I mean, it's still I mean, if you take away the high frequency trading guys,
Yeah.
maybe 15% of the market is really coming from algo trading. Like people who actively do algo trading for a living, right? So I think I think that way India is a decent place to be in.
Yeah, I think even 15% would be a pretty big number if we take out the high frequency volume, of course. Then I think yeah, it's a pretty much an early stage market, I think, when it comes to algo trading from the retail or professional traders perspective.
But
So yeah.
good thing is that India is there's enough liquidity. I think we are amongst the top few exchanges in the world right now, right, in terms of trading volumes and liquidity. So I mean, not volumes, I mean by number of trades and not really number of by absolute value, but yeah, I think that way there's enough and more opportunities, and I think we need more people to come build liquidity here. So it'll be nice to have because today what's happening is, I think in India, I don't know if you're tracking this, but there's an issue with open interest. So the end of the day, open interest isn't really going up, even though the trading activity is going up, right? So most of the trading today is just kind of intraday. So hopefully I
Yes.
got a good interest in this, but hopefully the audience that comes out of your your training, etc., end up holding open interest overnight.
Yeah, we definitely hope for that, and in fact, we hope that the regulators here make it even more welcoming for the foreign investors. I think once they do that, even more EPATians can contribute. I'm sure. I would be looking forward to it.
Oh, actually, in terms of regulation, I can maybe add a few points. What you have
Yeah.
to think about in India, right? See, the thing is, brokers like a few of us offer APIs, right? As in, we have something called as Kite Connect APIs. So it's kind of a gray area in India today. As in, see, the thing is, a broker is not allowed to offer algo trading, right? What it means is, Zerodha can't come and say, what, these are my 5 algorithms. They're automated strategies. They make money, use it and trade it. So that is clearly not allowed. So brokers, so we don't have like a strategy marketplace and things like that. So all that we allow is APIs. So now using the APIs, someone can potentially automate trades, right? But we will not know about it. As in, even if we don't offer APIs, someone could just use a macro to automate a trade. So there is no way us as a broker can do it. So regulatory wise, use of APIs to automate, it was when these rules were framed, there was no concept of APIs. So it's right now it is not there. So one of the risk here is that one of these days someone gets up and says, what, if even if you're consuming APIs, you need to get the strategy or something like that. I mean, it'll be a nightmare, but it'll be so that's firstly around the regulations. The second thing about regulations is because some of these queries keep coming to me from people who use Kite Connect. So the other thing that comes through is this data that they get through these APIs. Can they publish it publicly? Again, not allowed. Right? India is luckily one of the few countries where you don't have to pay data to the exchanges to as long as you're a trading account, you're say you have account with Zerodha and you're using it to trade on the exchanges. In India, you don't have to pay any data fee to the exchanges, right? But otherwise, in a country like US, exchanges charge, I think, I've seen some of the NASDAQ monthly plans which run into $150 a month just to be able to consume live data feed from NASDAQ, right? So that way, India doesn't really have any restrictions in terms of using data for your own personal use, right? But if you're gonna use this data, you put some strategy on top of it, and then you publish some outcome out of the strategy onto your website, then there is no issue. But you can't consume the data and put the raw data out there, right? And the other thing about that question that we typically get with guys who are programming or coding strategies is, can I have a strategy marketplace, right? Can I have, like, I have 10 different strategies, can I publish the results and get people to pay to follow each of these strategies? that comes unfortunately under the whole research analyst and RIA regulation. So if you intend to do this, if anyone's planning to kind of publish results of a strategy on a platform and say pay for it, I'll pay for it, and then you follow it, and then it tells you every time it takes a trade, you will have to be registered as a research analyst, on the Indian exchanges. I mean, a bunch of startups that we are working with have done this, So, but yeah, so that's about some of the regulations in this country.
Yeah, I think these are pretty much the same questions. Honestly, even when we were exploring different verticals within QuantInsti, like we created Contra after EPAT, we created Contra, Blue Shift, all of that. So these are the questions that we had to explore a lot with as well. That so Blue Shift, you cannot publish data, of course, as you rightly said. You cannot automate. You have to keep it one click. Marketplace, we had explored, we had thought. I think we had even discussed between us. I think there are a lot of challenges in terms of the clarity, which is not there. Probably is not allowed, or whichever it is. But yeah, I think having that clarity hopefully would be coming over the next near future, and I think that would really help it grow, and more entrepreneurs come up and offer interesting things. Because that's my personal thought, that you cannot have, in financial markets, you cannot have run fast, break rules, grow fast. So that's not something which works with probably other businesses, e-commerce and others probably across the globe. Might be a bit tricky here.
Yeah, absolutely.
Great. Great, thanks. That's pretty interesting insight. And talking about the flip sides, and if I focus more on, say, the professional traders, not as much of the retail, but more of professional traders who are, say, probably looking at more of rule-based or programmatic trading, part-time, full-time, whichever way. So if, and as you said, that you do see a lot of such people, what are the biggest mistakes, you can call it, or maybe more of the things where they are making the common errors while they are trying to scale up their business, right? Scale up their AUM or scale up their business. Have you seen any common trend on that? So it's more focused towards when you're scaling up the AUM, scaling up the business.
Yeah, no, I think, see, the thing is, so firstly, right, stock, like everyone thinks stock markets are an easy place to make money, but they're probably the toughest place in the world to make easy money, right? As in, you got better odds of making money buying lotteries than coming and trading the markets. So because the thing about trading is, even if you made money, will you be able to take that money home after a few years, right? Because I've seen so many people who've come, made money and given it all up and more, when time. Great guys, very smart, intelligent kind of guys. So so the thing, yeah, so it isn't easy, I mean, markets are tough, and what makes it tougher is, it's like, it's like playing a T20 game, but you are playing it every day for 250 days a year, right? I mean, there are some folks who want trading to be 24/7. I mean, like, I can't imagine how that will be, right? As in, like, I can't imagine what it must be for people trading Bitcoin right now. Like, as in, you can't sleep, you can't, I mean, you're gonna burn out at some point, right? So so yeah, so I think the first thing to for everyone, right, and no matter how smart you are, I think the first rule is, it's a really tough place to make easy money, and like like personally, when I used to trade the markets, I realized that I'm not a very disciplined guy, right? Because I get carried away, take aggressive bets, etc. So I blew up a couple of times. So this was something that I learned after blowing up, and so one of the ways I kind of hacked my way around this to ensure I don't blow out was, I always used to keep only the money, like like 5% of my trading capital in my trading account, right? And the 95% of the funds was kept it in, my dad used to work in Canara Bank, so I used to park it in Canara Bank. We didn't have any online banking, right? So there was no way I could like blow out 5% and then add money intraday just to recover, because I don't know how many, because the problem is most people end up tilting when for everyone who's played poker, when you're in a drawdown, just to be able to not tilt when you're in a drawdown is probably the most important thing to learn, in the markets, right? Yeah, I mean, you just have to stop trading, take a break, right? If something is, because the problem is, like I said, right, we've all been taught that you need to be a hero, right? As in, you have to fight through it and etc. But in the markets, I think the best way to get over problems is just don't do anything, just stop, walk away, right? As in, that'll be like 95% of the time, that'll be really the right thing to do. Of course, once in a while someone goes down, he can recover and come back up. But the odds of that happening are quite less. And also what I've seen personally is that people start to become becoming irrational when they're in drawdowns, right? As in, suddenly, very smart people talking sense before suddenly start making no sense, when suddenly they see large drawdowns in their accounts. So like I said, right, and I mean, I think trading is all about how you manage money, how you manage your greed, fear, and all of that. I mean, the strategy itself is probably the most simplest piece of the the actual buying is probably the
Very
simplest of the whole thing, right? As in, so yeah, so I think for anyone doing, I think you need to focus on money management. Second thing, I think rule is always, especially in the business of money management, under promise, over deliver, right? As in, if you end up uh, trying to do this for others, if you oversell yourself, you will be forced to be aggressive, right? Forced to take more risks, which means the more, it's like, it's the more times you get on a jump rope, the higher the chance of you falling off it, right? You don't even want that kind of money, right? I mean, if because some of folks, as they get bigger, they'll figure ways to manage others' money, right? As in, and the problem is, I've been part of so many, such pitches to me, and every single person who said, what, I'll make 10% month for the next 10 years. I mean, I know he's gonna take, I mean, he's saying that shit just to get my money, right? As in, it's. I mean, of course, you can end up making 10% a month, but you can't start off saying, what, I'll make 10% a month for you, right? As in, so and you don't want such customers, because those customers who come in with the wrong expectations, they become almost like a technical debt for you, right?
yeah.
Because after a while they'll bother you for the return that you didn't give them, right? And in trading, I think the most important aspect is to be at peace at all times, right? And you don't want all of these things to bother you, because then you again take a chance of doing something irrational. So like I said, I think it's about money management, trading psychology, just like be stoic, whatever it takes to be stoic, because I think it's very important to be stoic when you're trading, right? As in, not react to all these ups and downs that are going to be invariable when trading, especially if you're trading professionally. I think putting food on the table, trading full time, is probably one of the toughest jobs on this planet Earth.
Yeah.
So it is.
Very true. I think, I think probably you want people who don't react but respond. So respond with the proper judgment. So I think that's there. And yeah, that's a pretty amazing take. Interesting. And where do you think we are headed towards? Not in terms of direction of the market. I no interest in that, but more in terms as an industry. What do you think are the larger trends that you are seeing in the financial markets industry overall?
Yes. No, I mean, if I'm where markets are going, I've been a very pessimist kind of a guy over the last last 1.5 years, and all my pessimism is, like like every time I'm pessimistic, it's just in my face. Market makes another all-time high. So it's like, thankfully, we're benefiting as a business because of all of this. But yeah, so it's kind of weird whatever is happening to capital markets around the world. So, but longer term trend, I think firstly, in terms of participation in the stock markets, something has changed, right? As in, it's just, and I think it's changed for the long term, right? So there is this, there is this huge 20 to 30-year-old population that now, cares about stock markets. I mean, it might be greed, right? I mean, it might be greed that is getting them in, but and these are folks who are just building their careers, and they've just, you know, and they have tasted the markets, right? Of course, you know, if market falls tomorrow, they'll disappear. But you know, once you've tasted, they're not gonna disappear forever, right? As in, and because these guys are all, you know, and the good thing about this 20 to 30 year crowd is that they're trading with small amounts of money, right? So even if they blow out, you know, it's not going to be a large blowout that, you know, it's going to, no, they'll earn it back in quick time, right? So whereas I think, you know, folks who are 40 plus, 50 plus, you know, if you see them blow out, right, that's a very kind of a, you know, it's a super risky kind of an event. So this, and India has the largest population of this 20 to 30 year olds. You know, some of my friends who run large brokers in the US, I think exactly the same thing is happening in the US as well, right? So you have this, you know, like this entire breed of population who would have never thought about stock markets. They're now thinking about stock markets and financial assets. So which means that potentially in the longer term, you know, 5 to 10 years types, you know, you will have more people trading the markets. And this pandemic has probably accelerated like 3-4 years of that 10 years. So, you know, where we would have been in 10 years from now, we'll probably be there 5 years from now because of, you know, whatever happened in the last 1.5 years.
Changes,
So
right?
correct, absolutely, yeah. And yeah, so I mean, one participation was, I think, you know, it's trending up. In terms of like, at least I can't comment on other markets, but I think in India at least, I think I don't think real estate is going up again, right? And I don't think bank rates are going up, you know, anytime in the near future. So, you know, almost stock markets become like really the only option where you can come invest, right? Or I mean, like I keep telling, you know, that like sometimes, you know, as I keep telling, you know, some of the folks within the office, like, you know, we every day are sitting down and mapping a competition, right? Saying, you know what, these are the folks who are competition, and then I know I keep telling them that, you know, we'll keep looking at these guys as competition, and maybe someone else will come and take away the industry. Like, you know, like how Cisco WebEx was, you know, was risky to the airline industry, right? Something completely non-related. I think one such risk that lies for you know, regulated folks like us is this whole crypto piece, right? Now, you know, because, you know, it's not regulated, someone like us can't offer it, right? So there is a regulatory moat of sorts for people who are offering the crypto exchanges. And if that market continues to grow at the rate it is growing, then potentially, you know, you can, all these millennials who are today thinking about stock markets, I mean, a lot of them are also doing crypto. I mean, they might just say, you know what, crypto is giving me more returns, let me just look at crypto, right? So
Just focus on that. Yeah.
yeah.
That's
But I sit on a bunch of committees, you know, on SEBI and etc. So you know, where these conversations around crypto are happening. I don't think it'll happen. I mean, I don't think, you know, the Indian government or actually will allow the whole crypto thing to become like a really large market. But that potentially is a risk for people who are looking at capital markets. That, you know, potentially that can take away if it continues to grow. You know, if Bitcoin keeps growing up, you know, if it's at $200,000 in 2 years or something, you know, then, you know, like, it's just a no-brainer, you know, because greed is essentially what creates, you know, people attract to a certain product. And so yeah, so that's another potential risk to the markets. And
yeah. And I think one of the big trends as well that you're seeing right now, which one can't miss, I guess, as you rightly said. Interesting. Very nice. That's so very interesting. So Nithin, one last question. All your followers, I think, knows who read about you, who have seen you interacting on different platforms. They all know that you're one person who has managed the whole triad or the quadrat of health, wealth, family, and businesses, like really, really well. So if you can share with us, what's your secret? What's your mool mantra? How to manage that?
no, wealth is right place, right time. You know, so it was just like I said, I started trading the markets when I was 16. Did a bunch of stupidity. So, you know, Zerodha happened actually when I was, you know, I think Zerodha really started trending up when I was maybe 35, 36. So it took almost 20 years. So, you know, so it wasn't that part of my life wasn't easy. I wasn't a good student. I didn't really finish my college. So, and, you know, I've done multi-level marketing. I've done call center for like, I don't know, 3-4 years. So the career part, today it seems very, like somehow I got it right, but I think it was after me getting super lucky in my life, being around the right kind of folks and etc. About health, I used to play sports from when I was young, so I played different kind of sports, basketball, football, a lot of basketball, um, and uh, and when I started doing business, I kind of realized that you need to have some edge on your competition. Like in basketball, you can either be fast or you can be tall and big, or but you need to have something. You need to have some kind of an edge. And for me personally, being healthy is like an edge I think I have over a competition. So it's almost like I look at it as in a very competitive way. Is in one, it helps me de-stress because the like if I am having a bad day, I just go for a run or a swim or play a sport, right? So it just, because the problem is when you are stressed, if you play a sport, for example, you're completely distracted, right? Otherwise, whatever you do, right? I mean, you binge on Netflix, you probably are watching Netflix, but in your mind you're still thinking about a stressing point, right? As in, for me personally, playing a sport completely, it's almost like meditation, right? As in, you're completely, you know winding off whatever you're thinking. So sports, health, all of this, uh, I mean, I've the problem for me is that I can't eat healthy. In a sense, I mean, I eat healthy, but I do have my binging days. And I love my alcohol, I love my chocolates, I love my sweets and stuff like that. So every Saturday, Sunday. So I might not look as healthy as I feel healthy, but else that met my wife when we both were in the call center like 20 years back. So yeah, so she was there for like, she's seen the toughest part of my life, and so yeah, so she's been responsible to keep the family aspect of it together by not setting too high a bar for me to reach. So
Okay.
yeah, but apart from that, I think I've done so many businesses. I've realized that being reactive is like I personally think being the stoic way is really the best way you can trade, the best way you can run a business, right? A lot of people come to me and like they come with the idea that if you're running a business, you have to be super aggressive, you need to push everyone on your team to work for a long time, you need, and we've built the business completely opposite to that. I mean, we have never, not a single person in our office has a revenue or growth target, not a single person. I mean, now we shut all our work by 5 p.m. every day. We right we help
Yeah.
our competition, and but we are still the most aggressive stockbroker out there, but without being aggressive in the traditional sense. I mean, I will never badmouth my competition, I will never, right? So it's just, I think in today's world you don't need to be the way people have showed businessmen to be in movies and books and etc., right? As in, you can be relaxed, you can chill in your life, as long as you have the right intent, you're caring for your customers, and you have a right team. um, I think, and of course right place, right time, good things can happen. I don't think this whole, you need to like do 20 hours a day, read 7 books a week or whatever. I mean, those things are really required in your life.
Yeah, I think ultimately you, as you mentioned, being stoic and keeping yourself together, be at peace, at calm. I think that's really important to make any correct judgments or probably right judgments, you can say, be it in business, family, health. And I think as you what you were mentioning, I would see that there is a strong connect in all of those things, be it about the finding edges in your basketball game to your business, and I think finding a balance in family. I think that makes a lot of sense. Thanks for sharing that.
Sure.
so so that's been wonderful, Nithin. Thank you so very much for sharing your insights and words of wisdom with us. I think you mentioned a few things which were remarkably important. I think for all of us, not just from the trading perspective, but even from the higher degree life perspective as well. So thanks for sharing that. And of course, the points that you mentioned about the trading and investment, I think as we progress towards the our journey towards becoming traders on behalf, saying on behalf of all the alumni, EPAT alumni here, I think that would be really, really helpful. Thank you so much for sharing that.
Yeah.
And thanks for all your contributions to the industry. I think that has really, really helped the overall industry a lot and everyone in Zerodha. Thank you.
Thanks, Nitesh.